Well, we have a 3% move on UltraTech, and earnings on your screen, at the bottom of your screen. Profit is surely a beat, nearly a 10% beat on the profit after tax number. The revenue number also doing fairly well, not just on a year-on-year, but even on a expectation perspective. Just about a 50 crore beat, it seems, on the top line number. The margin number expected at 16.3 has come in at 16.8, and there you go. That estimate is what stands out for me. The net profit number has come in at 1470 crore versus 1320 odd crore. That was the expectation. So that beat is what's leading to a bit of a spike on the stock. The stock was doing well in trade anyway. So there you go. That's where the net profit versus the expectation is. The net profit is down on a YOY basis, but nonetheless, the revenue is higher on a YOY basis. So doing fairly well for itself, UltraTech. You can pull up the intraday chart on the counter as well. That's the EBITDA number. It was doing well anyway, some bit of volatility coming through, and now it's spiking up 3.5% higher for an UltraTech Cement. So doing well in trade. That's of course on the earnings count where UltraTech is concerned. You know, if you can pull up the EBITDA number as well and the margin picture versus last year, the EBITDA number has come in at 2887 crore versus 2798 crore, which was the estimate of the EBITDA. So EBITDA is what is leading to the beat. We'll of course get you perspective. We have Mihika who's going to join us in just a minute or so. And you have the margin number, which is at 16.8 versus the 16.3% number, which was anticipated. Also, if we can have the YOY number on both the EBITDA as well as the margin count, because on a year-on-year basis, the top line is largely flat, just up 3%. But the EBITDA number is down 11 odd percent. And even when you're looking at the margin number, it's slightly lower. From the 19.4, it's come down to 16.8. But the question actually is going to be, is Q4 that quarter where executions ramp up starts, and therefore you might actually see pricing on the cement front start to pick up, and that you've already seen that, and therefore your Q4 number may be a far better way of looking at some of these numbers as well. So you'll actually get more positivity on these numbers in Q4, given the fact that pricing has gotten better in Q4, and a lot of it has come at the end of Q3 as well as at the beginning of Q4. But we have Mihika joining us to give us more perspective. 4% now on UltraTech Cement.
You know, despite, you have your key metrics falling on an annual basis, the metrics have met and beaten estimates. Now, this was expected. We did expect an annual downtick in the metrics on a year-on-year basis, but a sequential improvement. That's exactly what we've seen. Revenue up 2.7% at 17,193. This is versus the estimate of 17,130 crores. We have EBITDA at 2,887 crores, despite a downtick of 11%. It has beaten the estimates of 2,798 crores. Margins have actually surpassed what was estimated. It's coming at 6.8% versus 6.3% estimated, and net profit is coming around.
It's 16.8 versus 16.3.
Yeah, 16.8.
You said 6.
Oh, sorry. 16.8 versus 16.3%, and net profit is standing at 1,469 crores. Now, they did achieve a capacity utilization of 73% during the quarter. Domestic sales volumes were up 10%, and this is the higher band of what the expected volumes were. There were high single-digit expectations between the range of 6 to 10%. UltraTech has posted domestic sales growth of 10% year-on-year because of overall demand improvement as well as market share gains. And in terms of your, margins meeting, you've seen your energy costs coming off 13% downtick on an annual basis in energy costs as well, and 4% quarter-on-quarter itself. So you've seen an annual as well as a sequential improvement, and that is mainly on the account of the decrease in fuel prices. UltraTech's expansion program is also progressing as per schedule. As part of its ongoing capacity expansion program, it's commissioned additional 1.8 million tons per annum of capacity, and with the acquisition of the India Cement Limited Corporation, UltraTech cement capacity is now increased to 171.11 million tons per annum on a consolidated basis. And on completion of the ongoing expansion projects as well, this includes the acquisition of Kesaram Cement, UltraTech will have more than 200 million tons per annum cement capacity by the end of FY27, which will be far larger than any other company out there, Harsh.
Right, and those are of course UltraTech's numbers, but 4.5% higher on UltraTech now, Mihika. What's the sense like? What has led to this spike in the stock price? Yes, it's a beat on EBITDA. Yes, it's a beat on PAT as well. But what's the sense like? Is there a sense that in Q4, the quarter will be stronger, given that there have been price hikes undertaken? Because that was just what I was speaking about, that Q4, will that be the crucial quarter according to you?
Yeah. So we've seen price hikes coming since October of 2024. Didn't stick much for the first few months. But December is actually when we did see prices sustain.
Yes.
And we've also seen in the first fortnight of Jan itself, you've seen pan-India prices pick up, if I'm not wrong, around 5 rupees per bag. And this is on an average. Yes, there are certain pockets that haven't seen an uptick. But for UltraTech, given that it has presence in all the key regions, it is, you know, the top cement company in terms of installed capacity. So even when you don't have an uptick in one region, an uptick in a second region is going to benefit the company because it's not a regional player. So Q4 is important. The expectations are for demand to also kind of pick up and come in line. We've seen a good domestic sales growth, 10% volume. That's a double-digit volume growth. Yes, on the lower end, but it's on the upper end of what volumes are expected. Q4 is very key to watch out for. But analysts, as per the cement checks so far, are positive that prices are sticking at the start of Q4.
Okay. Let me bring on board both our analysts for this afternoon. Mihika, stay with us. Anirudh Garg, partner and fund manager at Invasset, joining us along with Kush Bora, as always, from kushbora.com. Welcome, both of you. Anirudh, let me come to you with regard to UltraTech's numbers. Want to try and understand your quick first take with regard to the numbers itself, and what does it show you in terms of trend?
Actually, we've not analyzed UltraTech's numbers right now. We have a different way of approaching it.
Okay. So fair enough. Point taken. Kush, would you wager a trade at this point?
Well, rather interesting setup. You know, the stocks actually run up quite a bit today, as we can see, but this was already in the offing in the sense that, you know, the stock was already seeing some sort of a recovery from the lows of about 10,500, thereabout. I think I'll wait it out. There's a 50-day moving average resistance plus, some supply pressure around the 11,300 to 11,400 mark. Tomorrow, or perhaps even today, who knows, if that level is taken out and we have a closing above that, that is when I think the stock could have a much smoother run towards 11,800 and 12,100 kind of levels. So I'd wait it out. I wouldn't initiate a fresh trade, but if I've got a position at lower levels, then I'll continue holding on to this one with my trailing stop loss around the 10,900 mark.
Okay, Mihika, I'll come back to you and we'll stick with UltraTech. So 7 to 8% is the volume guidance. Last year, of course, the numbers were standing out because of both volume and pricing, as we just spoke. But do you believe that we can go back to those levels or closer to those levels? And how quickly can we get there, in your sense, basis whatever commentary you've been listening?
First of all, it's all a trickle-down effect. It depends on your volumes and your prices.
Yes.
Considering that volumes and prices improves, you also have all of the cement companies having cost initiatives and helping, their EBITDA per ton. You've seen an improvement on EBITDA per ton in Q4 itself. Domestic EBITDA per ton above 960 rupees per metric ton, if I'm not wrong. This is on the higher end of estimates as well. It's around a 234 rupees per ton uptick quarter on quarter. So, if as long as volumes are in line with what UltraTech is guiding and we are seeing prices at least sustaining, you're not going to see a very big shoot in cement prices. That's not what expected, but a gradual increase in those positive moments, to stick. And then with the cost initiatives coming in, with energy fuel costs coming in,
and consolidation.
All the consolidation, it all plays a part on how their costs, end up falling.
Fair point. Okay, so cement will definitely be something that we'll keep our eye out on. Energy costs were lower mainly on account of a decrease in fuel cost. Some flashes also coming along with giving you perspective on what's happened with the numbers. Realization per ton was down around 7.5% odd on a YOY basis. Might just start to see that improve hopefully in Q4, that sustaining in Q4, and maybe that changes the dynamic.